India's healthcare sector is undergoing a once-in-a-generation transformation from hospital infrastructure to diagnostics, health insurance, medical tourism, and digital health. And each pillar is expanding rapidly. Now, what I'm going to do is in this video, I'm going to break down all of this from a macro landscape as well. Now, the macro landscape and the structural demand drivers in India today are looking very interesting. Now, segment-wise market evolution is taking place, and two listed companies are showcasing the changing business models in the Indian healthcare space. So let's begin first with the bigger picture. Now, the Indian healthcare industry today is valued at approximately 6.5 lakh crore, expected to double by 2030 at a CAGR of 12 to 15%. And India just has 1.3 hospital beds per thousand population, significantly lower than the WHO benchmark of 3 private hospitals account for 60 to 65% of the bed capacity and 70% of the outpatient care. Now, clearly, there's both a demand and supply gap today that is waiting to be addressed. Now, if that is the case, then let's look at what the growth drivers are. Number one is demographics and urbanization, because India's urban population today is expected to reach 600 million by 2031. Health insurance penetration, over 57 crore individuals are now covered under some form of health insurance. If we talk about medical tourism, with cost 60 to 80% lower than Western nations and comparable outcomes as well. So India's medical tourism market is expected to reach 13 billion by 2026. Now, all of this is good, but another growing sector is digital healthcare and diagnostics. Now, the growth of preventive diagnostics, wellness, and teleconsultations is creating a parallel digital infra layer. Now, capex cycle and operating leverage for listed company chains are also good because they are adding 1,000 beds each and every year, and that is going on for the next 2 to 3 years. And even if you look at the budget, there is very good budget allocation on healthcare and pharmaceutical space. Now, if we just look at the healthcare and pharma segment, the healthcare segment can be broken down into 5 different verticals. Number one is your hospitals and inpatient care. Number 2 is diagnostics and pathology. Number 3 is pharma and generics. Number 4 is health insurance and fintech health platforms. And number 5 is medical devices and consumables. The healthcare space can be very difficult to track because there are so many metrics in each stock. Right? This is exactly why BSE recently launched an index for this called the BSE Hospital Index. Now, let us see how it has performed compared to our Nifty. Last 1 year, it gave slightly less than 7.39%. But if you take the last 5 years, it has given a return of 34.18% compared to Nifty's 14.68. Now, obviously, past performance is not a guarantee of future returns. So basically, who is it for? This is for investors who want long-term capital appreciation by investing in India's hospital growing story. And to make sure one can invest in this and be a part of the healthcare boom, Grow Mutual Fund has come up with an ETF called the Grow BSE Hospital ETF, which tracks the BSE Hospital Index closely. Which means if you choose to invest in it, you are automatically investing in hospitals like Fortis, Apollo, Max Healthcare, Narayana Health, and Aster Healthcare, which is a part of this index. But also keep in mind that the risk meter for both the hospital index and for the fund is very high. So make sure that you do your research before you go ahead and invest. Now, in this video, I'm going to focus on hospitals, which is the most capital intensive yet the most resilient part of the value chain. So today, what we're going to do is we're going to look at 2 listed companies in the hospital space. So the first company that we're going to look at today, and this is also a company that I like, is called Apollo Hospital Enterprise. Now, please note, I'm a SEBI registered research analyst, so I have to do some disclaimers here. The stocks that I'm showing in the video today, I do not hold them at this point of doing this video so that there is no conflict of interest. But let me just talk about the stock because it's a very interesting stock. The first company is Apollo Hospital Enterprise, and this, one of the largest hospitals in India, comes in the top 3. And if you look at it from a 1-year standpoint, it has beaten the index by giving 23% return. From a 3-year standpoint, 67, and from a 5-year standpoint, 144. So, Apollo Hospitals is that kind of a company that has been a long-term compounder over a long period of time. And if you play, let's say, the Indian compounding story for hospitals, then Apollo Hospitals comes right there when you look at things, right? Now, if you look at the market cap is 1,08,000 crores. And as I said, the entire hospital market cap is only 6.5 lakh crore, out of which 1 lakh crore is just covered by Apollo Hospitals, right? And in Apollo Hospitals, we will usually look at the growth rate. If you look at the yearly growth rate in revenue terms, with medical inflation and all of that, it keeps going up. Profit also is very up. I mean, it's quite good. And these profits are little lumpy because in this business, we look at EBITDA more than profit, which is earnings before interest, tax, and depreciation. And if you look at the net worth also, it is going up. But what is more important, if we go into the investor presentation, what I need to understand that if you look at this hospital, it takes, first of all, a long time to build a hospital chain in India. Why? Because it is capex intensive, as we have spoken about. Now, this company, Apollo Hospitals, is completely there all across India. And it is very rarely you will see pan-India hospital chains being created. And if you see right now, they have 76 hospitals all across India, which I would still say is very less compared to the number of hospitals we actually need for India. And this is one of the largest hospital chains. 76 hospitals, out of which 47 is owned, 6 is managed, and 23 is day surgery and cradle, which is for the kids department, right? Coming to the beds, they have 10,000 beds only. 10,000 beds is nothing for a country like India for a tier 1 hospital. Owned hospitals is 8,800 and operational beds is 9,500. The remaining are not operational at all. So this is how it looks like. But if you look at Apollo Hospitals, they are there across the spectrum. It is not just a single specialty hospital. Most of the hospitals you see might be multi-speciality. Sometimes they might be single specialty, but Apollo has everything. They have something for the mother and kids. They have dialysis, they have diagnostics, they have dental, they have sugar, they have clinics, they have Spectra, and they have IVF fertility as well. So Apollo Hospital is one of those companies that are there across the value chain, pan-India, and has multiple different things playing out in the same space. Now, if you look at the revenue analysis, Apollo Hospitals has a very good revenue growth, has been having a very good revenue growth from a long time. Their EBITDA margins is consolidated at 14.9%. Now, if you see here, the major revenue comes from the healthcare services, and most of the margin, which is when you go to the hospitals, comes from this segment, which is 24% right now. If you look at the diagnostics and retail health, is a low margin business at 10%, and the digital health and pharmacy game is approximately 4.5% only. But if you see the business here, the revenues are completely different because 31,000 comes with 76 hospitals across India, and obviously they have 24% EBITDA margin. But the pharmacy and digital health business is a business of scale. It's a business of volume. And that is something that we're seeing here, that look at the volume that is kicking in here. They already have 28,000 crores coming in from here, and they have 8.9% margin at this point with EBITDA, and they have a 4.5% EBITDA margin over here as well after all the operational costs, right? But this is something that can scale without putting any single hospital. So this is a low cost, capex light model that can work really well going forward for Apollo Hospital, right? And that is something that people are also very bullish on. Next, coming to another thing, if you look at the debt, as you see that most of the time what happens when a company starts growing, they have to take on a lot of debt. It is as I said, it is a capex intensive business. But if you look at Apollo Hospitals, their debt is in very manageable terms as compared to any other hospital. That means they can go more aggressive if they want to in this entire space, right? Now, if you look at another very interesting image here, which is the healthcare services, they are currently operating in operating beds is 4,600 in metros, non-metros 3,400. So if you look at their operating beds here, they have approximately 8,000 beds that are operating, out of which the bed occupancy rate is almost 70%. And the inpatient volume, outpatient volume is very important because these are the number of people entering and exiting, not occupying the bed. And if somebody occupies the bed, they have something called ALOS, which is average length of stay. So here, if you look at the average length of stay, its average is 3 days of stay. So if anyone gets admitted in the hospital, 3 days they will stay. And the net revenue from that person is approximately 34,811. And the average revenue per inpatient, if I get admitted, 1,73,000 is going to go from your account. So that is basically what this math basically says, that if you get admitted, you are definitely going to be in a small problem. Now, coming to the healthcare services expansion plan. Now, they are planning to add 4,400 capacity beds, 3,600 census beds over the next 5 years. And these are the places where they are going to add. Now, they don't need to add beds by going and building hospitals. They can also go acquire hospitals, and they've given that entire plan over here. In 2026, 2027, approximately 2,000 beds will be coming, right? In 2029 to 30, there'll be 4,400. So you can see that most of their new beds are coming in the second half of the decade, which is coming in 2029 and 2030. And the project cost is going to be 4,700 for that. But here you see most of it is going to be a hospital asset allocation in Pune, Kolkata, Hyderabad, mostly tier 1, little bit tier 2, but mostly tier 1 cities as well, which is going to be very interesting. Now, another thing what they're planning to do recently that they came out with, they're saying that they want to demerge their business. They want to demerge their hospital business, and they want to demerge their pharmacy business as well, which is growing very fast. Low margin business, as you saw, 4.5% EBITDA margin business. So this is what they want. They want an automatic listing of the new company and direct participation of Apollo Hospital shareholders in the new company. So the new company will have this as the shareholder, and this is going to be a new company that will come now, Apollo Pharmacies, that will come, which can unlock a lot of value. The listing should come around Q4 FY27 is what we are looking at. So if you look at the combined distribution of this entire game, you will see that the revenues are obviously growing from FY24 to FY25. They have good revenue growth. And if you see, most of this is coming from the online pharma distribution, offline pharma distribution. So offline pharma, which are the Apollo pharmacy stores that you see, they are making a lot of revenue, insane amount of revenue. So this is the offline part. All of this is in INR million. Yes, INR million. So it is not rupees million. Sorry. Yes, this is in rupees million. So if you see that most of the revenues right now are coming from the offline division, and online division is very less, and they've also taken a company called Kaimed. So the total division comes to this much. The EBITDA is 7.5 here and 2.7 on Kaimed, which now also tells me that there is a lot of synergies that can play out here, where it can increase from 2.7 to 7.5, right? So this is going to be very interesting, and they have a very good growth rate as well. So what are we seeing right now? One is a very integrated healthcare ecosystem that Apollo is playing, called Health Core Strategy. Basically, you want anything in the world of pharmaceuticals, or you have any problem, you can go to Apollo Hospital and they will solve it for you. Whereas all the other hospitals don't have specialties everywhere, right? You talk about pharmacy distribution, they are again one of the best in India, and they are also growing very fast with 5,500 stores, right? They're also focusing on premium healthcare delivery. That is why their average revenue per occupied bed is 33,000, and their average revenue per customer when you come to their room is or you get admitted is 1,73,000. And you see all the other hospitals, very few people have this kind of premium that they can actually command, right? Coming to Apollo Digital Health, Apollo 24/7, this is something that they're scaling up right now. They had not scaled this up, but this is basically your telecommunications, teleconsultations. Like if I have any problem, I can just go and consult with the doctor online, right? So this is very interesting. Now, the next company that I'm going to do is Narayana Health. Now, this is a company that has a super promoter. Now, again, full disclosure here, because I'm a SEBI RA, I have 43 shares of this company that I bought in my son's portfolio recently. So just giving you a full disclosure. Now, on a 1-year period, it is 36%. On a 3-year period, it is 152%. And on a 5-year period, it has given 290%. Again, a very interesting company to look at. And if you look at the growth of this company has also been good, profit has been good, and revenue has been growing as well in this company also. Now, if you look at Narayana Health as well, you will see that this company has, as you see, compared to Apollo Hospitals, it is not that diversified as compared to Apollo Hospitals from a pan-India standpoint. So they basically have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 compared to 76. But one very interesting thing about Narayana Health, which very few people know, is that they're also there in United Kingdom, and they're also there in Cayman Islands. They have 2 operations in Cayman Islands as well. And if you see here, they have 18 facilities and they have 5,300 beds, which is again very interesting to look at, because if you look at Apollo had 76 facilities and they had 10,000 beds, and they have 18 facilities and 5,300 beds, which means that they have hospitals that are much bigger and they have more bed capacity as compared to, let's say, Apollo hospitals, right? And 2 in Cayman and 13 in United Kingdom. These are smaller capacities, as you can see, 165 and 330. So totally they have 55 capacities with 5,900 beds in total. And they are trying to become pan-India. And again, if you have read anything about Devi Shetty, he is a very good expert. I think he himself is a cardio surgeon. Maybe not sure, but he himself is a very good doctor, one of the best in the industry. And from what I know from the market data, that most of the people who come from medical tourism usually come to Narayana Hrudayalaya mainly because they like it, right? And they're very good. They give very discounted rates, and they do a lot of pro bono as well. Now, looking at this company, yes, if we look at the revenues have been growing. International has been growing much faster. As you can see, from 397 to 593, 46% growth compared to the in localization growth. So that is something that we're seeing here. Owned hospitals versus operator hospitals, 73-25. Asset light is 25%. Again, let's look at some more data on the average revenue. These are the capacity beds. These are the revenue growths. As you can see, most of the revenue growth is coming from their Bangalore hospital, which is 17% revenue growth. Very interesting here, right? Going down. EBITDA profile is pretty much the same as Apollo, which is 23%. Cost structure is also given here. We will only go through the main points. And recently, there was also a data on them actually getting into the insurance space, which is again going to be very interesting to look at, right? Now, coming to their international business in United Kingdom, they have no borrowings at all. They only have lease borrowings. So they have no borrowings at all, which is again very good, which is going to be a cash-free growth kind of an expansion, right? Very interesting here. This is the entire capex strategy. This is very important for us to learn. So this is the FY26 actuals present. So here we are seeing a good amount of growth coming in Cayman. Yes, very good amount of growth coming in Cayman as well. So they're saying they want to add another 215 beds in HSR and Kolkata. We can see a lot of beds coming in the next few years. So FY25 to FY30, they are increasing their bed count by almost 50%. So that means you are going to get a lot of revenue coming in these domains as well. And with Bangalore being a good game here, I think this should be very interesting. If you look at the DIFI data, is also very encouraging over here, right? So again, Narayana Hrudayalaya is one of those very key businesses that are very good. What do they have in their favor? One is operating leverage through capacity utilization, which is very good. Basically, their hospitals in Cayman and SRCC Mumbai are seeing improved bed occupancy, which is giving them better returns. They also have premium specialties compared to normal specialties, which gives them high margin business. They're also doing more expansion via Cayman Islands. They're operating at 70% EBITDA in their new cancer facility, expected to start in FY26, which is going to drive a huge amount of revenue. With the rise of Ayushman Bharat, as I said, they're also entering the insurance space. So this is something that we are going to look at very deeply as well, right? So these are some of the interesting things that we are looking at. But again, there are more things to look at, but these are the key factors for those two companies we saw. So I hope you guys enjoyed this video and like this video. And if you do, please click on the subscribe button and also like the video as well. Thank you guys. Take care. See you. Good night.